All right. Hello, everyone, and welcome back to Stock Market After Hours. My name is Mark Rusin. I'm a CPA here in the state of California in this cold and rainy day here in Southern California. I know that's not something we hear all that often. For those of you that live in the Southern California area, we got a big, or what some folks call a big storm, getting a couple inches of much needed rain here in Southern California. But it's good to be back with you guys. I know we took a week off after our big stock options workshop, which was a big hit. I hope all you guys enjoyed it. I had a number of people reaching out, giving us very positive feedback on how helpful it was. So we'll definitely be doing another one of those workshops in the very near future, and even potentially doing an add-on to that, more of like a 201 options workshop coming up in the future. So let me hear where you guys are tuning in from today. I see Ron tuning in from Panama. And let me know, what have you been buying in this bit of a choppy market that we've seen here through the first month and a half, I guess we can call it, here in 2025. So two things. Let me know where you're tuning in from and what have you been buying. Let me know down in the comment section. If you would be so kind just to hit that like button down below, that definitely helps with the growth of the channel, and it helps push our videos out to an even wider audience. And some of you may saw that this was a big week for me personally, and the fact that we surpassed here at Rusin Financial 100,000 subscribers on YouTube, and I can't say thank you guys enough, because without you guys, we wouldn't be here. And it's always great to chat with you guys about stock market and stock news, earning news, to kind of give you a different angle on things that I'm looking at. That's the idea of these live shows. That's the idea of the videos that I put out on a weekly basis, just to give you some other things to think about that maybe you weren't thinking about, and different angles to look at stocks that maybe you weren't looking at in particular there. So I definitely want to say thank you, and I can't say thank you guys enough for being part of this awesome community there. So, all right, John is in the house. What do we got from Tulsa? He's got ZS, GEV, NEE, SoFi, Crowd, Trim, some Mag 7 stocks. There we go. Looks like John watched the latest video that we had. What's Up is tuning in from Michigan. Opinion service now? Option service. We got an option service as part of our newsletter, if that's something you're ever interested in. Denise from Manhattan. Eric from Ohio. Shaitan, good to see you from Cyprus. Peter from British Columbia, Canada. We got Anthony from Tennessee buying a little Microsoft. Ron with a little Bitcoin and SCHD. Those are two completely different asset classes right there. I like it, Ron. That's what we call diversification. Jeffrey Hatch from Washington, sunny Washington. Had to throw that in there, and knowing that it's rainy down here. Oh, Jeffrey. Playing some options, though. Good to see you, my friend. Buying a lot of Tesla for What's Up. Benson, Vici. Vici with a question mark. What's the question? Denise was in and out of SMCI before earnings, now very skeptical, looking at ACHR as a new play. Aubrey, Cape Coral, Florida. Nice. Is it sunny? I'm going to guess and say it's a sunny day there in Cape Coral, Florida. Awesome. Well, it's great to be with you guys here tonight. Let's get into the slide decks here and get rolling with our stock market after hours. So again, like we always like to start with a quick economic update. What's going on in the market? What's the performance of the major indices? What is the valuation? What are interest rates doing right here? So as you can see, we didn't meet last week, so those last week figures are from the last time we've met. So it's been about 2 weeks now. But Dow Jones right now, year to date, it's up 4.3%. Last time we met, it was up 5.1%. So we've seen some selling there. S&P 500 is up 2.9%, pretty much flat since the last time that we met. NASDAQ, same, up 1.8%. Russell's up 2%, which is about 60 basis points below where we were last time we met a couple weeks ago. Oil sits roughly at $71. Not much change there, but Bitcoin's been a little bit more volatile, getting over that $100,000 threshold and then creeping back down. It's been kind of hovering right around that 95 to 105 area is kind of where it sits. And as of making this slide here, we've set at 97.7. Valuation, again, still at those historically elevated levels right now at 22.4 times. So again, you look at stocks that are out there right now, and you look at the AMDs of the world and the Taiwan semis, and it's hard to believe that these stocks are trading at market multiples in those low 20 range, but that's where the S&P 500 is now, because it has so many of those technology Mag 7 technology stocks, higher growth stocks, Higher growth stocks usually come with higher valuations. So, and they could be a little bit more volatile from that perspective. And we've kind of seen a little bit of a not a panic, but tapping the brakes a little bit as it pertains to the Mag 7. And I got a slide for you guys coming up in a little bit here. As it pertains to interest rates, and definitely if you are just getting into investing in general, understand that you want to keep an eye on interest rates. Interest rates can play a major role in what stocks do. After all, the bond market is much larger than the stock market. So understand that. Right now, the 10-year sits at 4.63, the 2 years at 4.36. Those are both higher from the last time that we've met. So we've seen a little bit of a tick higher in both the 10-year and the 2-year. Nothing crazy right now, but they have both ticked higher there. Fear and greed index is sitting right on the cusp of that neutral and fear range. So we're technically in the fear range now. So sitting with a rating of 44 now. So let's jump on over and let me see if I can get you guys up on the iPad here so we could take a look at our sector performance here. So looking at the screen right now, you can see here's our year-to-date performance. So right now, communication services on the top, and that probably makes sense considering what has it been? I want to say Meta was positive today. Does anyone in the comment section tell me, was Meta positive today? If that were the case, it would have been 18 straight green days, I want to say. So let me check real fast. Yep, Meta up, squeaked out a 0.78% gain. So I think that's 18 straight days, 17 or yeah, that would be 18 straight days for Meta. Yep, there we go. Thank you. So that is the leader of the communication services sector. You got Meta and Alphabet, both of them up there, up top. So plus 7% year to date. Financial sector coming in second, up 6.5%. Materials up 6%, and energy also up 6%. But the thing that we're seeing right now is, again, it's only been roughly a month and a half, but look at what we see here. And let me get my the pencil going here, is the fact that a lot of the times when we had these live shows, it was 2, maybe 3 sectors, and then it was the S&P 500 index. So there's only 2 or 3 sectors that were actually beating the index. Look what you have now. Almost the entire S&P 500, and that shows you how big technology is now, but only 2 sectors are underperforming the actual index as a whole. So, and again, those are the only sectors that are red on the year so far, albeit slightly. Consumer discretionary down 0.09%. A lot of that has to do with Tesla. And then you got information technology down 0.5% there. So down 0.5%. Everything else year to date is in the green. So we're starting to see that broadening that we've been talking about quite a bit here on our stock market after hours. So let's take a look at the past 3 months. So this will slightly dip into December a little bit here. But again, this goes back to a lot of what we saw last year. 4 sectors outperforming: consumer staples, financials, discretionary, communication services. So let's take a peek at what's been working in the past month. So now we're transitioning here to 2025. And you can see that everything is green. Financials on top, real estate. We're starting to see a little bit of a turnaround there. Again, I don't see much catalyst like I did back in August when we saw our big jump higher. The catalyst was rates are coming down. No longer the case here. And I think that's pretty clear based on the CPI report that we got here today. So again, you're starting to see this broadening. That's fantastic. Technology has worked. But if you've been around investing for a while, you know that investing comes in cycles. Different sectors. The same sector cannot continue to work year in and year out. We've had a technology run 2023, 2024. Them and communication services was pretty much a one-trick pony. So to look at it now and say, okay, investors are kind of just starting to broaden a little bit more, it makes sense because you want to go look for the next deals. Where's the next wave going to be? Where's the next area that I can make money in from that perspective? And when you think about some of the economic policy that's coming in, we have sticky inflation, we have tariffs coming in, some other uncertainty around it. We want to broaden our portfolio. Diversified portfolios typically win year in and year out, okay, over a long period of time. So it's very important that we don't want to be too narrow focused when it comes to building out our portfolios there. So let me jump over to the comment section, make sure I'm not missing anything there. We got Richard Perry tuning in from Windsor. Nice. Beautiful. Zach's been buying some Pfizer puts, and hello from KS, Kansas City, Kansas, or just Kansas. King David's in the house. If there is a lot of volatility, then investing in high quality stocks with some bonds will smooth over the volatility. I think regardless of what is going on in the market, I tend to always focus on high quality. You will not see highly speculative, micro cap, super volatile type stocks ever enter my personal portfolio from that perspective there. Can you play them with options? Absolutely. And that's one of the greatest things about options. I did 2 option plays here today with earnings with both Robinhood and with Reddit. Reddit, I had put a debit put spread on, so looking for the stock to decrease. And for Robinhood, I had a debit call spread, looking for the stock to increase. Again, both of these highly volatile. They've been great performers, but they're not things that I want to necessarily enter into my portfolio or be a sizable position. But I still want to be involved with them, take advantage of some of that volatility, and get paid, which is exactly what I'm going to be getting tomorrow once I close out of those option plays, assuming things hold and Robinhood continues to go up and Reddit has been cratering after hours. So again, never take after hours at face value, but that's apparently what we're seeing right now. What's up says high interest rate makes Bitcoin go up. Well, Bitcoin's kind of been just going a little bit sideways there. You know, I don't talk much about crypto on this channel, and because I think a lot of people come to me to hear more about true valuation of stocks and dividend stocks, value stocks, and high quality growth stocks and things like that. So, you know, I always like to try and stay in my lane from that perspective and give people what they're hoping for. But when it comes to Bitcoin, just a quick, you know, side note here, you know, I don't know how many of you guys watched the Super Bowl. That was a incredibly boring Super Bowl. And it was so boring that I was just sitting around and ended up buying $500 worth of Bitcoin. You know, I saw Bitcoin creep down into the low 90s at one point of the game. And I was like, hey, you know, I'm just going to sit here and I'd rather buy some Bitcoin. And sure enough, you know, it popped back up towards 100,000. So I made a little dough there so far, but again, not a big crypto investor myself, only a little bit of Bitcoin. Matthew, good to see you. Don, hello. What's up? I made good money all week. Good. That's the point. We always want to make some money each and every week. Vancouver. Joseph. Diversify protects your wealth. There you go. Benson, would now be a good time to buy Vici. I haven't looked at Vici in a day or two. What do we got right now? Well, nothing's been happening. When I saw the Vici question mark, I'm like, oh, is there something that I missed from that standpoint? But I continue to think, you know, Vici, especially under $30, is incredibly cheap. When you look at the valuation, trading at a price to FFO around 12 or below that, I think this, in terms of where this multiple could be, I think it could be in excess of 16. So there's a lot of multiple expansion. I mean, you got to give credit to this company with the high quality assets that they have. I mean, you just think about Caesar's Palace, Mandalay Bay, the new Hard Rock Casino that's going in, New York. I mean, there's a number of properties. The largest landlord on the Las Vegas Strip. I continue to love Vici, and it continues to be my largest REIT holding there. So that's my little plug as it pertains to Vici there. Hoagie from Indiana, great to see you. Mark, love the name. Mark Payson, thoughts on SMCI, value at 40. So not a stock, again, that's in my portfolio. And the reason being is I'm a former EY auditor. So worked there for about 6.5 years at EY. And seeing that anytime I saw an auditor leave a client, knowing how money hungry these big four accounting firms are, knowing how hard they compete against each other especially to get public clients, to see them walk away from a client because they believe that they have internal control issues, that's a major red flag for me. So again, this is a company that was expected to issue their last year's report that still has not been issued this year. So what is taking so long? There's just so many red flags there. So by you investing in SMCI, it's you betting that they are going to be able to kind of revert course, get back on course, I should say, not get delisted and get those issues figured out. So it definitely can go one way or the other, and it could definitely work out for you. But again, focusing on quality, that is not a company that I put in the quality bin by any means. All right. Ron did some Bitcoin buying on Super Bowl as well. Please advise on BYD stock going up. Again, not one that I follow all that closely. Boyd Gaming, $6.8 billion. What are they at? Wow, they've had a nice little run up. What is that? Last 6 months, 40% in the last 6 months. So yeah, I mean, looking at it high level. Again, this isn't something I have no idea what their margins are. I have no idea what other valuations are. So not something I'm definitely going to opine on by any means, just because I'm not familiar with it from that standpoint. So I have irresponsible allocation of Tesla. Well, it was working for a while. And right now, when you got the tariffs, especially when you have things as it relates to not only China, but now we're talking about steel, aluminum, other tariffs that are coming into play. So, I mean, Elon is, in a sense, part of this administration. So you would think that he would kind of be in the president's ear a little bit there to hopefully help Tesla a little bit. But I think investors are starting to get a little bit concerned with, okay, we understand that Elon doesn't sleep at all, but really how much can he take on and still be focused as the CEO of a public company? And you're investing in a company that you hope has strong leadership and you hope continues to drive profits. Is his full attention there? And there's no one on the planet that can say his full attention is on Tesla, because he's got the Boring Company, he's got Tesla, he's got SpaceX, he's got Starlink, he's got now part of the government, and there's just no way to look at it from that perspective there. So there is some concern, and we've seen the sell-off with Tesla of late there. So Seminole, Florida, for Linda, good to see you. Dividendology made the live stream. Good to see you, my friend. Great channel there. Still rocking SCHD. Are you at 100K subscribers? If so, congrats. Sure am, King David. We did it this week. So awesome. All right, let's keep going with the slides here. A lot of great questions, great group of folks, very interactive group, which we love to always see each and every week. So let's jump over back to the iPad now and take a look at our Fed Watch. So here we are looking at the next meeting. So again, the last meeting here in February was pretty much uneventful. No real moves. The next meeting comes in mid to late March, which again is going to be uneventful. We have a 98% in terms of the Fed watch tool here that believes that rates are not going to change. And when you continue to see it, we've talked about it on this channel a number of times for months now, saying that the Fed made a mistake by cutting rates. Why are we late to the party? And then to raise interest rates because we thought it was transitory, and they still cannot admit to that really. And now we're going to be early to leave the party. Makes zero sense when you have sticky inflation, whatever data point that you want to see. And you could say, oh, but they see stuff that we don't see. Well, we're getting all of that for months now, and they continue to be wrong from that perspective there. So by cutting rates, 50 basis points, I could see them cutting 25 basis points and maybe a max of 50 basis points over the last 6 months. But anything above that makes zero sense to me. And again, I'm not a Fed official by any means. And hindsight is 2020. But again, I'm still looking at the data just like you guys are looking at the data, just like they are looking at the data. If you look at CPI today, there's not one note in there that tells us that inflation is coming down. Not one. There's a few things that you could look at, which we're going to have a slide on here in a second. But we have seen inflation bottom for what's been 3 to 4 months now. And it's been slowly ticking higher, not lower, not even higher. We have a job market that continues to be fine. It's not super hot by any means, but we're definitely not seeing layoffs like crazy by any means. And the Fed's main job is with monetary policy to watch inflation and protect the job market from that perspective. That is what their job is. And I think by cutting 100 basis points, it's been a total mismanagement from that perspective. And I think they're sitting on their hands now saying, without saying it, but they're probably saying to themselves internally, hey, we might have screwed up here. Because there is now actual talk, not saying that this is going to go to the direction, but there is actual talk out there of some economists saying, I wouldn't put it past them that they might have to hike in 2025. How would the stock market react to that? So that would be a major, and I know President Trump wants the Fed just to cut rates immediately from a growth perspective, but I don't think that is the answer there right now. So that is where we're at in terms of the March meeting. I thought it was very informative when we look out here at the probabilities, because this is something that we've looked at a number of times here on the show, and we were baking in 2 to 3 cuts in 2025. Right now, we're sitting at this range right there, 425. Again, the blue highlights tells us where the majority is. So you can see that there's not expected to be any change through the end of July. The next cut is projected, and there's only a 41% chance of it, so it's kind of a split decision, albeit slightly, 41.4 versus 41.3, but that would come in September of 2025. So not until fall of 2025 could we potentially get our next cut. And you could see it'll be one cut, and it'll stay that way until almost the end of 2026. There's actually starting to see some additions for rate increases in 2026, albeit small. Again, I'm just talking about the rumblings that could potentially be going on right now. But this is a Fed right here that is kind of stuck. They are stuck in the mud in terms of by increasing rates fast and by decreasing rates slowly, it allows you to give you more firepower. Because if you move too fast, you can only get to zero. We're not going to go below zero by any means. So you can only get back to an interest rate of zero. So why are we rushing to get back down if there's no evidence, zero evidence that is showing a weak job market and inflation that's under control? So again, we haven't talked about the Fed. It fires me up as always, and that's going to be my 2 cents on the Federal Reserve right now. So any questions on that before we keep rolling here with the slides? Feel free to drop those. And again, if you're just joining us, do me a huge favor and click that like button down below. It definitely helps the growth and the expansion of the channel to get greater reach there. Don, congrats on the 100K. Thank you. I appreciate that right there. What else we got? Jose, hey, Mark, I got a small investment account besides my retirement at 50% ITOT SCHD to buy and keep for a few years. The way the market is going, is it worth adding a little bit of growth? I think it's always important to, when I talk about diversification, I think it's important to diversify amongst different sectors. And again, that never means equal weight across every single sector for your portfolio. You can be overweight certain sectors and lower weight certain sectors, but diversification can also mean growth versus dividend. That's if you are a balanced investor. So those are the things that we talk about within my 6-week program, is defining your personal strategy. Everyone has a different strategy. Everyone has a different risk profile, a starting point. Everyone has a different amount that they're putting in. What is their end goal here? What is the volatility that they're able to take? All of these things go into account to building your own custom strategy. And right now, if you guys haven't seen any of our emails that have gone out, right now we're doing our open enrollment. This week and part of next week will be the only time that we are taking calls before we close our enrollment. Right now, we do only have 3 spots open. We had a couple other folks that just graduated the 6-week program. So we do have 3 spots. Again, they're only taught by myself. They do not pass you on to any other teachers like other programs that are out there. And it is a customizable program from that standpoint. So there is a link down in the description below, or you can check out any of those emails that we've sent out that we are doing our 6-week investing accelerator. That is open for enrollment. You can schedule a call either this week or next week, and those spots are limited there. So good question. All right, let me keep jumping through them here. Kenny checking in from Chicago. How we doing, Kenny? South Korea in the house. Nice. How are you feeling on Spotify? I love using Spotify. That's a stock that's been has been roaring of late, and I usually don't like to chase too many stocks that are roaring too much. V, good evening to you as well. Best place to put cash? That's a loaded question there. Are you a retired investor, a young investor? Are you a high-risk investor, balanced investor, low-risk investor? What does your portfolio look like? What is your exposure? So without knowing much of those details, there's not just a one place that I would go right now without knowing kind of that type of detail. Do you have an emergency fund and things like that? So can we get some ice cream now? I love ice cream. I do love ice cream. We just got a new ice cream spot here in San Juan Capistrano. Microsoft, a buy at 425. You know, Mag 7, we've seen a lot of investors start to accumulate out, not accumulate more shares. Actually, they're divesting their shares in these Mag 7 names right now. But I think Microsoft's a well-balanced, you know, if we're talking, hey, is 425 going to be great when I'm looking out over the next 5 years? Sure. I think 425 can be a solid spot. Do I think it's a big discount by any means? No. Definitely not there. I think if we want to see Microsoft below 400 is ideal from that perspective there. Mark, what are your thoughts on 35% SPLG, 30% SCHD, and 5% SCHG? I was going to say that doesn't add up, but there's the SCHG. So that's 95 and 5% Bitcoin. There you go. If you want kind of that hands-off approach, you're kind of mixing between value and diversification across many different sectors. Since you're using ETFs there, you're getting dividends, you're getting some growth there. So if you're looking for a hands-off approach, now, again, the 60-40 portfolio, the ETF-only portfolio, that's been a losing strategy over the past few years because it's been a little bit more of a stock picker's market. So if you just want to sit there and say, hey, I just want to make sure that I'm gaining slowly but surely, then sure, that's going to be a great portfolio for you. But if you're looking and say, no, I want some sizable returns here, I would like to be up with the market, but hopefully be beating the market or a chance to beat the market. It's going to be tough if we're just doing it with a couple of ETFs there. So the salmon of Capistrano. Love it. Thoughts on Nintendo? Not much of a gamer myself, but and I don't look at the stock that closely either there. So awesome. Love the questions, love the interaction, but let's keep going here with the slides that we got. Some in the news. So again, we've kind of touched on it when we talked about the Fed, but now I'm going to give you the data that's behind it. This is the same data that the Fed sees, and it still baffles me that they decide to cut interest rates 50% right out of the gate. So inflation is back. It's been back for about 3 months now. Up 0.5%. That's a month over month, just in 1 month. Up 3% on a year-over-year basis. So we got below 3% in the past few months, and lo and behold, now we are back at 3% and probably likely going above 3%. Core CPI takes out some of the volatility type of assets that are in the regular CPI account. That's up 0.4% and up 3.3% year over year. That's something that I focus on a little bit more, taking out energy prices and food prices. You could actually go a step further and look at super core CPI as well, but it continues to remain sticky. And I almost want to use the word growing again. I mean, I don't know if anyone has bought a carton of eggs of late, but this whole bird flu thing, whatever the case may be, you know, my wife has to buy these certain pasteurized organic eggs, and number one, they're already hard enough to find, but right now it's even more difficult to find, and the price is just through the roof there. So here's a look at that CPI number I was talking about, where we got to this astronomical above 9% at one point back in 2022, something we have never seen in modern history here. But if you go back to at least my modern history, I should correct myself there. So we got it back down. We touched 3%, and we've kind of just been sticky from that standpoint. We got it kind of low in that mid to mid-high 2% range. But really, since the past 4 months, you would call it now, 2 months of this year, 2 months of or month and a half of this year, and 2 to 3 months of last year, it's just been creeping slowly but surely higher and higher. So the dotted one is going to be the core number. The dark blue number is going to be your regular CPI. So you can see our 3%, 3.3. The thing to understand, though, if you're like, hey, is there a bright spot? Is this going to turn by any means? There's 3 large drivers that are making up roughly 60% of all of this as it pertains to CPI. So it's a calculation of things. Shelter accounts for 46% of all this. So that's going to be the number one driver right there, is that housing costs need to come down. High mortgage right now is going to be a big weight on housing. Tariffs is going, especially lumber tariffs, is going to be a big weight on housing. So maybe we can see a little bit of a pullback there, and some softening in those shelter costs. Auto insurance. I don't know if you guys have checked, especially here in California, not even talking about auto insurance, but housing insurance has just been astronomical. We were having it's not uncommon to see our insurance bills here in Southern California go up 35% plus, 40, 50%. I've heard some people from that perspective just because of the fire danger there. So, Jedi, thank you for that. I appreciate it. High interest rates will affect the stock market. Maybe tariffs could lower inflation, and so the Fed lower interest rates. So we do have high interest rates. Those continue to kind of be muddled. You know, we saw it start to dip a little bit there, but tariffs tend to be more inflationary because it's just going to cost more. It's going to be a higher cost to some people look at it as a tax on the U.S. consumer from that perspective, because the tariffs are trying to keep us from buying aluminum from Australia, aluminum from China, and things like that. So it can increase prices because to do production and manufacturing here in the States it just costs more. So if it costs more to do the work, costs more to do the labor, the prices are going to cost more. The input prices are going to cost more, which means we need to pass a lot of that on to the consumer, which is all of us, which is where things get inflationary. But it could also potentially, in some areas, slow growth. So when we talk about aluminum, these new tariffs that were the talk of the tape here today, that's going to impact directly, if you think about it, autos. There was some talk, though, that autos could be ignored from that and kind of have a bypass. So we'll have to wait and see what the final wording is on it overall. But tariffs tend to be a little bit more inflationary for sure there. So I appreciate you dropping that there. Much appreciated. Hood stock predictions. Well, it jumped today, and my prediction was it was going to jump based on the earnings there, which is why I did that debit call spread. So I'll be getting a nice little payday there as long as things hold tight. Let me get an update for you, make sure nothing has changed in our after hours. And they came out and spoke. Wow, it's up 14% after hours right now. So mine was at a $60 to $65 range on that debit call spread that we have there. So that should definitely hit max profits there. Let me get an update on Reddit for you really fast. RDDT. Reddit is down 15%. So two companies going in opposite directions there. Hood's going to hit 100 from the Soccer Shop Club there. There's you go. There's your price target right there. All right. So let's jump here to the Mag 7, or maybe it's the Lag 7. They've kind of been a laggard overall, and we've started to see more people diversify away from these Mag 7 stocks, not named Meta. But if you take a look, here's the Mag 7 that you could see. We got NVIDIA on the year down 2%, Alphabet down 3%, Apple down 5%. Amazon is a bright spot, up 4%, if we want to call it bright. Tesla has been the biggest laggard, down 16%. Microsoft down 3%, and the biggest winner for 18 straight days has been Meta, up 24%. So when you look at the Mag 7 here, it's really only been two stocks that are in the green here. And it's not because, the S&P 500 is not up, because when we looked at the S&P 500 a second ago, it's up nearly 3.2% on the year. So all of these companies here, except for Amazon and Meta, are lagging the S&P 500 as a whole there. So definitely some interesting things to see that are going on. And I think it's that diversification. Investors are starting to say, hey, there's going to be some other areas that haven't worked for a year, 2 years, that might be looking intriguing now. So investors are looking elsewhere. Again, the S&P 500, as I mentioned, up 3% so far. Equal weight right on its tail, up 2.6%. But what I found intriguing when I was doing my research for this is the fact that the Vanguard Value ETF, VTV, is up nearly 4.5%. Value stocks outpacing the S&P 500, which at the top is largely made up of growth stocks there. Let's look at it from another angle. The NASDAQ 100, the market cap weighted NASDAQ 100. Those are big tech stocks at the top, NVIDIA and Amazon, all those Mag 7 that we just looked at, up 3.3% so far year to date. But when you look at it from an equal weighted perspective for those same NASDAQ 100 stocks, nearly 6.5%, nearly doubling what the market cap weighted is. So that is clearly a picture that investors aren't pulling out of the market. They're just reshuffling and rebalancing, something that I did. We just published our portfolio update for any of those of you that are subscribers to the Stock Investor's Edge. We have two different subscriptions. You can get the Edge Plus, which is where you can see my entire portfolio and get my trade alerts, stock deep dives, earnings recaps, and our weekly write-up. And then there's the Options Edge Plus, which is everything options related, where we put out a weekly options idea list showing you what are we looking at, why are we doing this trade, so that you can help understand how you can start utilizing option trades. We give you both the trade that we're looking at as well as an alternate trade for those that say, hey, I don't have a lot of extra money to do options, but I'm interested in being involved in it. That's why we give the alternate trade idea as well, which isn't as cash intensive there. So we try and do trade ideas for every different level from that perspective there. So, and we got a lot of earnings reports. Another loaded week here. It's not as big as we've seen in the past few weeks here, but it's still loaded. We've had the likes of McDonald's, Coca-Cola, Lyft, Reddit, and Robinhood, and the Trade Desk. So the Trade Desk, I don't know if you guys checked that one out, but they missed pretty big on revenues there. And that stock was down somewhere of 20% when I had CNBC on a second ago before we started this, and we are down 27%. So the sell-off. So that's definitely one that, at $89. When was the last time that stock was at $89? We'd have to go all the way back to August 2024 when we had that big end of summer crash. Remember, there was an August one. What was that? August 5th or so. That was the last time. Trade Desk just wiped away all of the gains that they had since August of 2024. So that's definitely one that I'm going to be taking a closer look at that report, see what the management team is saying was the reasoning for it, look at the guidance and stuff like that. So if that's a company that you've looked at or been interested in owning, now could be a definite time to take a closer look. Now, when there's sizable moves like this, I tend to have a rule that says, let's give it 3 days before we jump in. 2 to 3 days, let the dust settle here and see what happens, because you would hate to jump into it tomorrow down 27%, and then it has another 5 or 10% sell off from that standpoint. So, but what I like to do is utilize options. I love selling cash secured puts on massive red days. So you like the stock and you were interested in it, you were watching it, it was at 122. And if I told you before they report earnings, hey, if it dropped to $90, would you be interested? And you'd be like, oh yeah, totally. So you can utilize options to kind of protect yourself a little bit. And if it drops to 90 tomorrow, how about you sell a cash secured put that says, I'll pick a strike price of 80, because if I liked it somewhat at 122, I loved it at 90, you're going to absolutely love it at 80. And you're getting paid to wait to see if you get that opportunity to buy a stock that you want at the price you want to buy it, and you're making income. So those are things that we talk about within Options Ed Plus. So for those of you that are on it, which I already seen a number of you that are within our Options Edge Plus Discord, be on the lookout, because we might get a Trade Desk alert tomorrow. So that is McDonald's. You got to give it to the management team there, is because it could have gotten way blown out of proportion had they not put a wrap on those onion issues that came out with the E. coli. Because you look at what happened to Chipotle years ago, that stock just absolutely cratered. But they got they got in there, they took care of it. They seem to keep the spread from happening, and the stock has been firing there. Now, the guidance was okay, but in terms of the report, the numbers that they reported for their latest quarter, I thought it was solid, and it's a testament to that management team. Coca-Cola continues to win. Again, aluminum isn't going to bode well for a company like Coca-Cola, PepsiCo, Dr. Pepper, Keurig, whatever it is, those companies. So something to keep an eye on. Lyft, they got pummeled as well, but that's another one that's kind of up on my watch list, because when you look at it, when you look at Lyft and you look at Uber's been a runaway smoke show. I mean, that one has just been fantastic in the past 5 trading days there. And I actually had option play on it to buy it lower, and it took off. So I made a bunch of money in my option play, but these are the times when you look at it and say, oh, I wish I actually owned the stock, because it jumped, 15+% there. Lyft was down pretty big. But I think it could be one of those cases where maybe they wanted to issue a very conservative guidance number, because that's what the whole drop was about their guidance there. So if you believe that, hey, they're just being conservative with their guidance, these are easily expectations they can meet, if not surpass, I think you could definitely take a closer look at Lyft there. Reddit and Robinhood and Trade Desk, those are going to be 3 stocks that I'll be looking at here after this show here, to dive into, to see what's going on in the conference call, read that, and take a deeper dive into the overall the numbers that they had just reported there. So a lot going on. And here is that Stock Investors Edge that I was just telling you about. We have 2 premium memberships, subscriptions. If you're ever interested, the Edge Plus gives you access to my portfolio. You're going to get access to a number of different rooms within our Discord community where you'll get trade alerts, you'll get stock deep dives. We're having our members only meeting, which that is a monthly meeting. That'll be coming up this Saturday. We do them on Saturday mornings. So be on the lookout for those of you that are already Edge Plus subscribers. And if you want to be a subscriber, check out the link down in the description below. We have a free 7-day trial. You get your weekly Edge report every Monday morning, earnings recap, and much more. But if you're interested in just options, check out Options Edge Plus, where you can get trade alerts there. That weekly Options Edge report that I mentioned to you, trade alerts, and an options only chat room and rooms within our Discord and much more there. So 2 different options that you have there, no pun intended, to join us at the Stock Investors Edge. We would love to have you within our growing Discord there. So I'll stay around a few minutes. If you guys have any questions, that is the show I got for you today. So again, all those links are down in the description. If you haven't done so yet, just hit that like button down there. I'd greatly appreciate it. And I want to say thank you guys once again. I said at the beginning of the show, but I know some of you come and go throughout the live show, is, we hit 100,000 subscribers this week on YouTube, and I cannot say thank you guys enough. So hopefully you guys continue to enjoy the content we love putting out, or I love putting out new content and talking to you guys, especially on these weekly times. This is a time for me to not just look in the camera, but there's actually someone on the other side of the camera that I can talk to in real time. So I appreciate all of that there. Lee's got a question. My question, what are your thoughts on AMD? AMD is a company that has been, number one, frustrating, but number two, I think is long-term, I think can be a big winner. And it's a stock that I own a couple hundred shares of. And when you look at especially data center, I think they're set up for some superb data center growth there. When you look at GPUs and data center revenue, and that's where a lot of this CapEx, when you look at the hyperscalers, and they're spending $60 billion each, whether it's Alphabet, Amazon, Meta, a lot of it is going towards data centers, which is going to directly impact a company like AMD. And when you look at the data center growth for AMD compared to that of NVIDIA, it's been a case where, hey, for this particular segment here, AMD's actually been winning that race there. Doesn't mean it shows up in the stock market. So from a stock perspective, they haven't gotten the credit for it yet. That's going to be the frustrating part when it comes to an investor. But this is a long-term position for me. It has been frustrating there, but it's one I'm going to stick with there. Thank you for your time. Congratulations on 100K. Thank you. I appreciate that. Lee Jones said, do you expect Microsoft to eventually bounce back? Absolutely. I mean, that's a high-quality company, a great management team. They have a lot of levers, whether it's their dominant position in cloud as a top 3 cloud provider. We know all about their AI capabilities there. They have software subscriptions. They have hardware. They have a dominant position with their Office suite of products as well. They have cybersecurity. It's just a company that's very diversified from a suite of products, and I love to see that. So one reason that I like a company like Alphabet as well. So they're not as diversified to the extent that Microsoft is, but definitely like both companies, and that's why they're both within the top 10 positions in my portfolio there. What about PMI? Big increase there. So that one, are you referring to Philip Morris, or are you referring to PMI, the economic stat? Can you clarify on that one for me, Benson, there? I just want to make sure you didn't misspell, because someone misspelled one earlier, and I was talking about something completely different than what a stock that they were actually looking at from there. Lee said, thank you. First time here, just subscribe. What will happen with Google? Will it drop further, do you think? Well, I mean, Thomas, it's hard to say on a day-to-day basis. I don't invest in stocks for the day-to-day swings. From that perspective, I look at, where do I want my entry point to be? Where do I feel comfortable? At what valuation do I want to buy a particular stock? But first, I look at the quality. Is this a company that's growing? Are they becoming more efficient? What's their balance sheet? This is all things that we look at within the 6-week investing accelerator program. I give every student that comes through it a checklist of items. Hey, if you are interested in a stock, this is what we want to focus on right here moving forward. Broski 2023 says, thoughts on Amazon and Google. So two of my largest positions right there. If I had to choose one, it's going to be Amazon. I love everything Amazon's doing. They've kind of flipped back to positive free cash flow. Their free cash flow margins are improving there. They have a lot of tailwinds, building out their own chips. So again, like we've been talking about with Microsoft and Alphabet, another company that is very diversified from the suite of products that it has, and not just products, but services, because they are the dominant cloud player. We know well all about their e-commerce business. I feel like I have an Amazon truck show up on my street every single week between me and some of my other neighbors. If you're watching, you know who you are. And it's just, these are the businesses I want to focus on rather than, and not saying you don't focus on them at all, but think about a company like Starbucks. They just sell coffee. They just sell really in the morning hours. There's not a lot of people that go as much. There are some. I drop into a Starbucks every once in a while around lunchtime and grab a second cold brew or something like that. If it's been a long night, editing a video or something like that. But they are fixated on just one product, really, coffee and some food products there. Whereas Amazon's got the e-commerce, got the subscriptions, they got the digital content, they have the chips that they're building, they have cloud. So they are attracted to, businesses are attracted to them, consumers are attracted to them. So that's the way to think about it for those companies that I want at the highest level there. Okay, so Benson clarified on Philip Morris, because I was starting to talk about the something completely different there. So Philip Morris, that one, again, Marlboro with the split. Altria stays in the U.S. Philip Morris is more international from that perspective. So huge jump here. It's a stock that I've looked at for Philip Morris, Altria Group, British American Tobacco Company. They've all for a while been trading at just rock bottom feeder prices for quite some time. But the fact of the matter is if you actually look at these boring dividend stocks, I always have the people say, oh, well, dividend, I need growth stocks. Okay, well, Philip Morris is up 67% in the past year. If I go over to a company like Altria Group, it's up 35% over the past year. Let's take a look at what's British BTI. They are up 40% over the past year. So these are dividend companies, and they are paying 7+% dividend yields here. And again, folks focus on just the dividend and not the share price appreciation part of things. It's a total return strategy. But given the run that they have had, and again, if you look at a 5-year chart, these companies haven't performed all that well at all. So you could still look at a company like BTI. They're trading at a single-digit PE ratio. If you go over to Philip Morris, though, with the gains that they have had, which is outpacing the other ones that I mentioned, now you're kind of in the high teens range on a forward-looking basis, which, again, these aren't companies that are growing earnings all that fast. So I have although it's less than a market multiple, I have a difficult time buying stocks at those levels there. And again, not really looking to grow my tobacco exposure either from that standpoint. I recently got out of Altria Group myself. Just think there's some other areas to invest out there. All righty, what do we got now? John said, I'm looking to build up XLE and XLF. Your thoughts on these? So XLE, as you know, is a position that I own. I think financials is already, since the election, has been one of the best performing sectors that you could see out there. I still think there's plenty of room for growth. Two things you need when you're looking at financials: a solid consumer, and I know, John, you know this well because you're in the banking industry there. We need a strong consumer, and we also need an economy that's going to work. And usually those things can go hand in hand. If we have a faltering economy, usually the consumer is weak. Usually there's higher layoffs. Not a typical time that we want financials from that perspective. But right now, I think we're on solid footing. Interest rates are expected to be higher for longer, which I think is actually going to be a positive for financial sector. If you think of banks, companies that are giving loans, that net interest margin, which is going to be the difference between how much they receive in income from loan revenue, that percentage they receive, less how much they're paying you, which is much lower, for that savings account, that high yield, that CD, whatever the case may be. The difference is really what their take home is. That's their net interest margin. Well, a lot of the forecasts were expecting interest rates to come down. So the net interest margin was going to shrink a little bit, but hopefully loan growth was going to pick up. Well, now those interest rates aren't expected to come down. They're expected to actually stay at the elevated levels for quite some time, which could be a little bit of a tailwind for financials there. Energy is going to be a unique one. I believe that energy can do well, but if we get any sense of talk that Ukraine and Russia are going to come to a ceasefire agreement, and same thing with the Middle East there, then that can just throw that energy trade completely out the door. So it's a little bit more of on your toes when it comes to thinking about XLE there. So Henry, I had mentioned this one at the beginning here is Robinhood is not a company that I want to invest in, but I did an options play on it heading into earnings, which has, we're going to get max gain on from that standpoint there. So not a company I would own, but one I would play with from an option standpoint. Alcohol, tobacco, and oil are definitely areas to look at if, in fact, we dip into a recession there. Lee says, AbbVie looks likely to grow. AbbVie is a stock that I love. It's been a fantastic company, one of the longest held positions within my portfolio, meaning that, I've been in and out of Apple. Right now, I have no Apple. As many of you know that are Edge Plus subscribers, at the beginning of January, I sold out of my entire Apple position. It was a company that was vastly overvalued. Doesn't mean I won't get back into it. But when it comes to AbbVie, that's one that I have not gotten out of and has stayed in my portfolio for quite some time there. Joseph said, what do you think about technical analysis? It's definitely a good question. It's something that I take into account, but it's never going to be something that alone that I'm going to make an investment decision on. Everyone out there that I work with, I always tell them the same thing. I say, hey, you work hard for your money. Why would you look at a chart without ever looking and knowing what the sales growth is, if it is even growing, what the earnings growth is, what the internals are, what the margins, efficiency, what the cash balance is, and the some of those ratios? Why would you work so hard for your money and invest because the stock chart is making a picture of a coffee cup or a flagpole? So although don't attack me for those of you that are technical, because those are things that I do look at, but it's probably going to be a 70-30 split, 70% fundamentals or 80% fundamentals, and that 20 to 30% technicals. Fundamentals can tell me which stocks to buy, high quality companies. Technicals can help assist when to buy them. Okay. So that's how I kind of approach it. I don't completely throw it out the window by any means. Thoughts on adding Verizon for steady dividend, Microsoft to my growth? So Verizon, that's going to be one of those higher yield, slower growing from, I think there's a little bit more competition in there. It's AT&T. T-Mobile now is a fast growing company, but I know Verizon's been one that's been working. But the problem that I have with the likes of these old telecom type companies is their debt. These companies have massive amounts of debt on their books, and we saw the stock run up to what did it get up to, the mid 40s or something. So now we're back in that $40 range. So again, it's a stock that it's gone nowhere. In the past 12 months, it's up 1%. So it's really, if you're looking at it from the yield to boost your yield, but again, I always look at stocks from a total return perspective. So what can you give me? Can you give me 8 to 10% share price appreciation to go along with 6% yield? Perfect. That's a fantastic return on investment right there. But this one trades a little bit more bond-like from that perspective, and even worse if you pick out the 5-year chart. Stock down 30%. But again, if you look at valuations today, it's a cheap stock, but it's one of those ones that I believe is cheap for a reason. Could there be some slight upside? Sure, but not an area that I'm looking to add in my portfolio there. Jedi is a new member. Thank you. Thanks for being a member. And again, any of you guys can be members to support the channel there. Definitely, it'll show up when you guys do comments, just like Jedi has done. Where you can drop, a couple bucks and it lights up so that I see it, because there's hundreds of comments that I see or don't see that get pushed through here that, but I get a little you guys can't see it right now, but I'm looking at it. A little bubble at the top there when people are members are making comments, or that, you know, they drop in a little super like or whatever the case may be there. So Jedi, I appreciate that from that standpoint there. And yeah, I just touched on that one with interest rates expected to stay higher for longer. It's definitely going to help with that net interest margin there moving forward. Thoughts on yield max? I mean, these are very high. You know, I would never just never invest based on yield alone. That's going to be my comment to that one right there. Some of these extremely high yield type plays can be short-term plays. Like, you know, you've seen plenty of my videos probably on touching on JEPI and JEPQ and things like that. Those can be, you know, solid investments, but it's usually a spot that if I have, you know, a good pile of cash that maybe I just sold a large position and didn't reinvest it in any new positions and things like that, then instead of just sitting in a money market, I'd like to throw it in JEPI. And sometimes it'll be 3 months, 6 months, or just a short period of time earning interest on it, because I look at it more from an interest play. It kind of caps out from a share price appreciation play just because of how they're set up, the option strategies that they utilize. And then I'm already utilizing option strategies myself. So why would I pay a 0.35%? And those yield max ones are going to be even higher than that. So definitely something to think about there. All right. Wow. We're at 55 minutes here. It's like the old days of the dividend power hour, but love it. Over 220 people in here right now. Thoughts on Lemonade, Jerry? That is I haven't heard that name in a while. That is a pandemic darling right there. That's when, you know, everyone was kind of stuck in their homes and playing options and thought, you know, you could throw a dart at the wall and put a list of stocks up there, and whatever it hit, you go buy or do options in and make money. Lemonade was one of those. It's a valid company. It's just a little bit more volatile. But man, I haven't seen that one or typed in that stock ticker in quite some time. Would love to see where it's at today. $32. Yeah, look at that. That was a stock that was, what they reached, $60 at one point last year. And at one point during the pandemic, this was a $170 stock that is today selling at 32. Still not a profitable company, highly shorted, so 23% short. So it's going to be very volatile from that standpoint. Not a stock that fits my my portfolio there. All righty. What else do you guys, anything else there? I don't touch anything yield max. Yep, pretty much right there. Is Meta still a buy? I think anytime you have a stock run 18 times in a row, it's one that I think is prime for a buyback. But I've also said that for the last 2 days as well. So I'll probably look to do some option plays that are going to look for the downside, some credit call spreads and things like that. So again, for those of you in the options Edge Plus, be on the lookout for some of those coming out possibly tomorrow. So, alrighty. Well, it was a fantastic group. Again, for those of you that are interested in joining our Stock Investors Edge, we got a great community all on Discord. It's the fastest way to get a hold of me and be in the market in real time. But we have 2 subscription choices that are there. You have the Edge Plus, access to my portfolio. We send out a monthly portfolio update detailing all the stocks I'm buying and selling, as well as all of our performance. You get real-time trade alerts, monthly members-only meetings, and that next meeting is going to be next week. We'll be going through my portfolio, what I'm seeing in the market, what did I buy, why did I buy it, what am I selling. You get stock deep dives as well, the weekly Edge report, earnings recap. However, if you are just focused, and there's a lot of people that do both of these because one's for stocks, one's for options. Options Edge Plus is fantastic. We've already pretty much paid for anyone that's joined it. We've paid for an annual subscription if they have followed our trades that are mentioned just in the weekly Edge report that you get each and every week. And that one will be coming out here tomorrow. Stock option education. You get of course, the option trade alerts and your option only chat rooms within our Discord community. So there's links down in the description below. I hope to see you guys in there. Would love to chat with you guys, as that is a growing community that is thriving, and we love everything about it there. So thank you guys for being a part of the stock market after hours. It's been great to be back with you guys. I will be out next week. We'll be traveling up to the mountains, take the kids up to the snow a little bit there. So I will be out, and we'll probably likely see you the week after there. So we'll be in contact though, and continue to watch the videos and hit that like button. That is free to do, and I truly appreciate it. So thank you guys. Great seeing you all, and have a great evening. Bye-bye.